The February 12th New York session anchor completed at the intersection of the 20 moving average and the 120 moving average. On the 1-hour chart, price lifted into the upper boundary of the February 12th Asia session range. That upper boundary aligned directly with the green 20 moving average. Above it, the orange 120 moving average remained slightly downward sloped. The New York session anchor formed exactly at that intersection. The candle body closed beneath the 120 moving average. Its upper wick interacted with the outer edge of the long-term white Bollinger Band. This was not expansion. It was containment. The white band remained moderately open, but slope continued gently downward. The red short-term band widened briefly into the close. Volatility expanded into resistance. It did not relocate structure. After completion, the next 1-hour candle began separating from the 20 moving average. Distance increased gradually. Body size contracted slightly. Acceptance did not develop above the 20 moving average. Instead, interaction failed to persist. Compression began just beneath that level. 3 consecutive candles printed below the 20. Upper wicks shortened. Bodies narrowed. The 20 moving average began flattening. The 120 remained overhead. Distance between them reduced slowly. Price then processed through the upper boundary of the February 11th Asia session. That level had acted as temporary support earlier. Now it transitioned into resistance memory. There was no sharp rejection. There was no acceleration. There was slow release. The white Bollinger Band began narrowing. Upper band curved inward. Lower band stabilized. This contraction marked digestion, not impulse. As candles drifted lower, they interacted with the lower boundary of the February 11th Asia session. Persistence developed beneath that zone. 3 consecutive closes held below it. Structure shifted 1 layer down. The 20 moving average turned slightly negative. The 120 remained above, still declining gradually. Distance between price and the 120 widened. Price then extended toward the upper boundary of the February 5th Asia band. That level had previously acted as containment during earlier compression. Now it was revisited from above. Momentum did not accelerate into that level. Bodies shortened further. Wicks extended in both directions. This was not rejection. It was absorption. RS. I moved toward mid-range. Slope flattened. Speed decreased. Volatility reduced inside prior session memory. The New York session anchor initiated interaction at moving average confluence. But structure processed lower through overlapping Asia session boundaries. The relocation was gradual and layered rather than sudden. The 1-hour chart now sits between descending moving averages and revisited session memory, where compression continues to define behavior. The February 12th Asia session anchor formed directly at the lower boundary of the February 6th New York session. That lower boundary had remained untested during the prior New York expansion. It functioned as deeper structural memory. Price approached it with reduced volatility. The Asia anchor candle closed with a narrow body. Upper wick extended modestly. Lower wick compressed against that February 6th boundary. There was no rejection spike. There was no displacement. There was stabilization. The white Bollinger Band at that time was contracting. Upper and lower bands curved inward simultaneously. Volatility compression dominated the sequence. 3 consecutive candles held above the February 6th boundary. Bodies remained small. Wicks overlapped. This was persistence within containment. Price then lifted toward the upper boundary of the February 12th Asia session anchor. That upper boundary aligned once again with the 20 moving average on the 1-hour chart. The green 20 remained slightly negative in slope. Interaction occurred precisely at that level. The first attempt pierced marginally above. Follow-through failed. The second candle tested again. Upper wick extended further. Body closed beneath the 20 moving average. There was no acceptance above the 20. There was no band expansion. Red, short-term Bollinger Band remained narrow. Compression intensified. 3 consecutive candles printed overlapping bodies directly beneath the 20 moving average. Upper wicks shortened. Lower wicks extended slightly. Pressure accumulated under resistance. The 120 moving average stayed above, still acting as distant containment. Distance between price and the 120 did not reduce meaningfully. The larger structural slope remained intact. Price then rotated downward toward the lower boundary of the February 12th Asia session anchor. That lower boundary coincided with the February 6th New York session low. Revisited memory stacked. The move downward was not impulsive. Candle bodies remained moderate. Red band began to widen slightly. Acceptance developed beneath the Asia anchor midpoint. Persistence continued for 3 candles. Upper wicks remained contained. This was not collapse. It was layered relocation. On the 1-hour chart, the 20 moving average flattened further. The 120 continued its gradual downward orientation. The white Bollinger Band narrowed across the entire sequence. Volatility was compressing between declining moving averages and session boundaries. The Asia anchor attempted expansion above its upper boundary. That expansion did not persist. Price returned into the lower half of the range. Structure remained inside overlapping session memory, processing slowly between confluence and compression. On the 15-minute chart, this interaction becomes more granular. The February 12th New York completion at the 20 and 120 moving average intersection appears as a brief micro-expansion. The red short-term Bollinger Band opened sharply for several candles. Upper band lifted with speed, but expansion lasted only minutes. Immediately afterward, bandwidth contracted. Upper band curved downward. Lower band rose slightly. Compression followed expansion. Price then processed beneath the 1-hour 20 moving average level, which on the 15-minute chart appeared as repeated lower highs. Each attempt toward that level printed diminishing body size. Upper wicks shortened progressively. There was no acceleration through that boundary. There was no sustained acceptance. Interaction failed repeatedly. As price moved toward the February 6th New York boundary on the 1-hour chart, the 15-minute candles printed a series of overlapping bodies. 3 consecutive candles closed inside prior micro-ranges. Wick length reduced. Micro-compression mirrored higher timeframe compression. RSI on the 15-minute shifted from overextension toward mid-regime. Slope turned flat. Speed slowed. Volatility drained. When the February 12th Asia anchor attempted upward expansion, the 15-minute chart showed 2 brief spikes above the micro-range. Each spike retraced within the same candle cluster. Follow-through did not persist. Red Bollinger Band opened slightly during those spikes. It closed quickly afterward. Bandwidth returned to narrow conditions. The 20 moving average on the 15-minute chart flattened entirely. Price oscillated around it repeatedly. No directional persistence developed. Lower timeframe structure is not leading. It is echoing containment from the 1 hour. The February 6th New York boundary continues to hold as reference. The February 12th Asia anchor range continues to contain micro-movement. The 1-hour 20 and 120 moving averages remain overhead influence. Volatility expanded briefly at Confluence. It compressed within memory. It now processes between overlapping anchors and declining averages. Structure is not accelerating. It is stabilizing inside layered boundaries, where compression continues to shape how price behaves through time.